Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello. Good morning, everyone. This is Kathy. I'd like to do a sound check. Please say good morning if you hear me and you can see me and everything is going well. Let me know that you're here. Sound check going well. I'm going to check the screen. Say hello. Good morning, Quanali. Good morning, Tony, Tom, Thomason. Good morning, everyone. Cheryl, Andrew. All right. Good morning, everyone. Let me know if you're coming in for the very first time. We had such a valuable session on Saturday with myself, Alexander Elder, and I know that some of you may be brand new. So let me know if you're brand new to our Monday Outlook, and you're tuning in for the very first time, or you're seasoned pro and you've been here a few times. Good afternoon, Peter, Efron. All right, seems like most of you. Okay, good. Welcome, Liam, first timer here. I'm so glad that all of you are joining me today, because this week is definitely going to be a very, very big, busy trading week, because we've got some very major events on the calendar. And on top of that, we have the stories that have been affecting the markets towards the end of last week into this week. So there is so much to talk about and so much that I want to cover with you. For those of you that are tuning in for the first time, typically, I go through the market outlook. I help, you think about your trading plan, and we create a trading plan together. And then Boris comes in and he actually lives trade with you. And so he lives trades with you indices and gold. And so I know many of you, are indices and gold traders. So it's a very, very enriching session, because not only do you get a walkthrough of what to expect this week, but you also get to hopefully make some money in live markets. And the markets are certainly moving, at least in the FOREX perspective today. So there's a lot to talk about. So, there are, 5 things that we are kind of kicking off this trading week with. First of all, it is the first trading day of June. So we're heading into the second half of the year, and we're walking into the second half of the year with quite a bit of US dollar weakness. And I've been trying to talk about this lately, about how to some people, it may be counterintuitive that the tariffs are hurting instead of helping the US dollar. But you can see from the price action today and the price action last week and on Friday that the tariffs are actually seen as more negative for the US attacks on Americans than it is for everyone else. And that is why you're seeing the simultaneous sell-off in stock futures as well as the US dollar, which is weaker across the board. So this is very important to remember, because we are going to get more tariff headlines. We can't escape it, for better or for worse. And so when we have this, did you want to say something, Boris?
Yeah, I just wanted to chime in on this, because it's a really interesting story today. Many of you are in Europe. Many of you are, of course, in Asia. Everybody's following the FIFA World Cup. Oh, sorry.
I'm sorry, I'm not following the FIFA World Cup.
No, but the reason why the story is interesting vis-a-vis the tariffs is because many soccer enthusiasts, many football enthusiasts are basically saying they're going to boycott the travel to the U.S., which is where the main FIFA World Cup is going to take place in 2026, because of all the fears of visa, visa controls that U.S. has been installing. So there's this enormous pressure now on FIFA to basically make the World Cup only in Mexico and Canada, and not the United States, where, by the way, the final was going to take place literally next door to my house in Jersey. and that's going to be very interesting. I mean, it'll be interesting to see if they succumb to that pressure, because while it's not a major, it's a decent economic impact, but it's much more of, I think, a symbolic impact of what's going on here. So just keep a note. It was an interesting story in the news today. I wanted to share.
Do you think that would really happen? Because I mean, they booked the facilities, they've been selling the tickets based upon the locations. The tickets are sold out anyway, regardless.
I mean, it would be a major logistical nightmare, but they could succumb to the pressure. I mean, it's not that they can't rework the venues to Mexico City and Canada. There's plenty of opportunity there. But I just think you're right. I mean, people who've bought tickets are going to be furious. And
I think it would be more if there was resistance. And correct me if I'm wrong, anyone who's in the room. There'd be more resistance if the players fear that as well. If they fear that they may not be able to return the countries easily, then they could put up resistance, and then I think that would be more legitimate because. Regardless, FIFA sold the tickets, right? And they paid for the venues.
I think given the television rights and everything else, they're probably going to want to stay there. But, I just thought it was an interesting story because it's really emblematic of like a lot of the push and pull that we're seeing in the tariff wars today.
I don't watch soccer, but is it really true, Tony, that all soccer games end in 1-0? I kind of feel that is true.
Not quite. The Champions Cup this weekend was quite a different story, both politically and sports wise. Yeah, I mean, I'm sure. This weekend. I'm not going to step on Kathy's toes, but I'm sure this weekend. Forget the economics. Just the macro geopolitics was insane this weekend with Ukraine bombing, Russia, with riots in Paris, with all sorts of fresh tension in the Middle East and the U.S. in terms of terrorist activity. It's just really, really, heating up. So I think all of those actually could weigh on equities as we start the week. We'll see.
I think it has, because that's kind of what I was going to get into, Boris, which is that, there are basically 5 things affecting the markets at the start of the week. Number one is, of course, we just talked about that. The beginning of the second half of the year, we have broad-based U.S. dollar weakness. And people are looking at, and as we head into the next week and the following week, any tariff headlines, they're looking at negative tariff headlines as negative for the U.S. dollar, negative for stocks, and any positive tariff headlines to be, then positive for the dollar and positive for stocks, even though, you would think that they would help those other countries whose tariffs are in place. I just think this is really important to remember as we watch incoming headlines. But aside from that, the other big story, one of the 5, is most certainly the geopolitical story. And it's most certainly the aggressive attack by Ukraine on Russia, as well as all of the terrorist activities and the geopolitical risk that is happening around the world. So we're walking into this brand new trading week with a lot of anxiety and geopolitical uncertainty, which I think most certainly weighs on stocks.
Hey, I was going to say, would you say that the single most important instrument to watch this week is going to be the yield? It's going to be the 10.
It's a very good question. I want to say that, but today, U.S. Treasury yields are up and the U.S. dollar is down. We've actually seen that correlation, which is kind of mind-boggling because this correlation has lasted for decades, break down in the past couple of months. And so
that's sort of my point. My point is that's a reflection of geopolitical risk and sovereign debt risk. And if that gets wider, meaning dollar keeps going down, yields keep going up, that's incredibly negative for all risk assets, including equities. That's sort of like, that's why I'm saying the higher the yields go, the more pressure there is on stocks from every single possible angle you could.
Unfortunately, I think that while you and I may know that that's true, I think that the media is going to be latching on to the other headlines, and the rest of the investment trading community is going to be latching on to the steel and aluminum tariffs being more negative for stocks, the U.S.-China trade tensions being more negative for stocks. I think it's easier for a lot of people to understand. It's easier for media to report. It's easier for traders and investors to point to, even though, of course, the yield story is going to hurt businesses, hurt consumers, and be kind of the behind-the-scenes strain that everyone's worried about.
Yeah. Okay. All right. One last human interest story of the week before I get off the screen.
I love it.
So how many of you saw the meme with Barron Trump and presumably President Xi's daughter, there was a
I
picture.
must be like living under a rock this weekend
Okay.
because I haven't seen any of this stuff. Granted, my children had lots of activities.
This was a huge meme that went through Twitter all week long or all weekend long about, oh, look, we could fix all of our problems if we just get Barron to marry President Xi's daughter, who's very, very attractive, I must say. Picture of an Asian girl. Turns out, unfortunately, even though all the major outlets have named this person to be President Xi's daughter, that is not President Xi's daughter. So that turned out to be pretty much a hoax. But I thought it was very, very funny. So that was the big meme.
Yeah, I must be living under a rock this weekend because I didn't catch any of that.
I'll get up the stage. I'll let Kay run the show, and I'll be back with you guys for live trading. Looking forward to it. I'll see you guys soon. Bye-bye.
Right. Thank you so much. So, we'll walk through. So basically what I said is, number one, we have we're starting the week off with broad-based U.S. dollar weakness and understanding how the tariffs impact the U.S. dollar as well as stocks. We talked about how the second thing that's affecting markets is most certainly the geopolitical risks and Ukraine's aggressive attack on Russia and how there most certainly will be retaliation. Number three, it is the deterioration in U.S.-China trade relations, which happened towards the end of last week, and is certainly carrying over into this week because, we're just waiting for the triple-digit tariffs to return once again on China by the U.S. So the market's kind of waiting with bated breath for that. And then, over the weekend or on Friday, I forgot the date, but Trump basically said that they're going to double the steel and aluminum tariffs. So, plenty of countries around the world are not happy about that. That is also one of the big stories in the market. And then, of course, today we have Fed Chairman Powell speaking at 1 p.m. So that's probably the most important event on the U.S. calendar today. Now, is he going to say something new? Probably not. The Fed has been pretty steadfast in their view that they are not going to cut interest rates until data really deteriorates, and we haven't quite seen that deterioration in data. So I don't think Fed Chairman Powell later on today is really going to say anything incredibly market moving, but keep an eye. That is the most important event risk today for the US dollar. On top of that, as a layer, we do have a lot going on this week in the markets. We have the non-farm payrolls report. We have all the data that surrounds the non-farm payrolls report, like ISM manufacturing, ISM services, that tends to move the markets quite a bit. We have ADP. We also have JOLTS. Actually, I think we have JOLTS today. And with jobless claims, those have been quite market moving. And then we have the European Central Bank rate decision. And then we have the Bank of Canada rate decision. And we have PMI revisions. We have so much on the calendar this week that it will, between headline risk as well as these events that we normally focus quite a bit on, we will have a very big week. And I'm not even talking about the Fed's Beige Book or the IVPMI or Canada's job reports. All those, of course, very, very important. But the three that we talked about, ECB, as well as the Federal Reserve, ECB, non-farm payrolls, and the Bank of Canada are the most important event risks. So that's really what we're walking into this week with. So how do we prepare as traders? Well, first off, we know that non-farm payrolls Wednesday is when we have the Bank of Canada rate decision. Thursday is when we have the European Central Bank rate decision. And Friday is when we have the non-farm payrolls report. Now, Wednesday, we also have ISM services. So I think that the front of the week, Monday, Tuesday, Wednesday, we should get some clear trading opportunities off of, the overriding sentiment that we have in the markets right now, any headlines, anything that Powell says. And then as we get to Thursday and Friday, it's going to be more touch and go. It's going to be, what is the ECB going to do? What is the ECB going to say? And then how is the non-farm payrolls report going to fare? So let's start off with non-farm payrolls. I've got here my heat map, which you should see. So I am bearish dollars this week. We saw a jobless claims spike last week that accelerated the slide in the US dollar. And on Friday, we have both the Canadian and US jobs reports, both of which are very important. The US jobs report, look at this, 130,000. Would this be the lowest level? Let's see, hold on. 130,000. This high was, if we get 130,000, it would be the weakest non-farm payrolls report since November of last year, and certainly the weakest this year. So, so this would be, I don't think, even though the US dollar is selling off, I don't think it's selling off because the market thinks the jobs report is going to be weak. So I don't think the market is fully prepared for this. But the market is looking for 130,000. Now, if we get 130,000, it will probably lead to a bit of dollar weakness. But I think that, if we get 100,000, that would be very, very ugly, because right now the market is still not pricing in a rate cut by the Federal Reserve at the next meeting. So if this drops to 100,000, I think those odds will change. But, there are other parts of the non-farm payrolls report that's always important to watch. I mean, the market's looking for wage growth to increase. So if we get 130 and higher wage growth and a steady unemployment rate, the dollar actually may not fall. So that is why, there's a lot at stake, I think, with this non-farm payrolls report. Now, with the Canadian jobs report, we don't have the forecast here, but Canadian job growth is expected to slow, and we'll look at it later on a different calendar. But for the U.S., we've got the non-farm payrolls report. We also have on Thursday the ISM services report, which surprisingly is expected to be stronger. And then I believe it's tomorrow that we have, tomorrow that we have the ISM. No. It's today. Sorry. That we have the ISM manufacturing report. And that is also expected to be stronger. So this is something that I think is important to pay attention to, because the market is looking for stronger survey data, which has been weaker in the past, and the weaker jobs report. And so there's a bit of a disconnect here that I think is going to be very, very interesting. But this is all going to be in the lead up to non-farm payrolls. Still, I'm bearish dollars. I'm going to remain bearish dollars until we get a reason to turn positive. We have the ECB rate decision on Thursday. This is very interesting because the ECB is expected to cut interest rates by 25 basis points. And I want you to look at this with me. Every single time we have a rate decision, I like to compile these tables. And these tables basically compare how the one country has changed from how data has changed in that specific region, country, from the last time that they've met. Now, some people will argue that trying to figure out fundamentals is hard. But, it is not so hard when we try to learn how to put ourselves into the shoes of the central bank. So, taking a look at this, and I want you to type into the chat, do you see more red or green? Do you see, Eurozone economy deteriorating, more bearish or bullish? I want to get your sense. Let me know in the chat box whether you think things have improved or deteriorated, red or green, bearish or bullish. Bob says almost equal. Goriala, I hope I didn't butcher your name, also says quite balanced. Park says looks even. And Karen says bearish, slightly more red according to Andrew. This is very important. It is not clearly all red or clearly all green. It's probably, there's definitely feels like there's more red than green. Martin is fast here. More red, 12-8. Yes, he did the math for us. Martin is our VIP today. He did the math for us. 12 indicators that are red, 8 indicators that are green. Yes, it's pretty much even, but there's slightly more red than green, which is why the ECB is going to be cutting interest rates this week, because retail sales, as you can see, in Germany and the Eurozone has weakened. Labor market activity has deteriorated. Inflation has weakened. This is what they really, really focus on. But most of the activity indices like trade and manufacturing PMI and the IFO report and part of the ZEWS, they've all for the most part improved. And we haven't seen much change we've actually seen a bit of a increase in the DAX and not much change in bond yields. So what does this suggest to us if we put ourselves into the shoes of central bank that the ECB could do? Well, it means, first of all, we cannot doubt that they will be cutting interest rates on Thursday. But remember, it's never really about what they do that is important. It's about what they say they're going to do in the future that is important. And based upon this, it suggests that the ECB is not going to be in a rush to cut interest rates again. And in fact, this is consistent with kind of what's priced in to the futures market. The market actually does not expect another ECB rate cut until Q4. So what that means is that the market expects the ECB to cut this week and then pause. So if the ECB cuts this week and then they're not going to just say they're going to pause, but suggest that they have not committed to another rate cut immediately, do you think it's going to be euro bullish or euro bearish? Take a wild guess. Type into the comments, the chat box, euro up or euro down. If they cut interest rates and then, kind of sound wishy-washy about whether they want to cut interest rates again. Do you think euro is going to rise or fall, euro up or down? Take a wild guess. Thomason says bull. Joe says bearish. Goriala says euro up. Karen says down. And this is really good because you guys are on both sides of it. There are some of you that say up, some of you that say down, and it's all over the place. So this is kind of where the game plan really comes into play. And I love that there's a bit of confusion. So first off, with most rate decisions, there's the rate decision itself, and then there is the press conference. So if we look at the calendar real quick on Thursday, this is Thursday, the game plan. So we have the ECB rate decision at 8:15 a.m. New York time. Then we have the ECB president speaking at 8:45 a.m., which is 30 minutes later. So at 8:15, they're going to cut interest rates. They're going to cut interest rates. And those of you that said that they are the euro is going to fall is probably going to be right because the euro will probably end up falling initially. The euro is probably going to end up falling initially, especially since, and I'm going to double check this. I think the staff forecast is going to be released. The staff forecast is, the staff forecast is going to be released. So what that is basically not only are they going to cut interest rates, but they're going to release their growth and inflation projections. And so chances are, the world is definitely more uncertain and there's definitely more risk ahead. So they're probably going to release more cautious growth and inflation forecasts. So all of that should probably lead to, at 8:15, an initial sell-off in the euro. But I think that, so you have two options here. Either you sell it quickly and you buy back quickly. But what I think it's going to do is it's going to fall and it's going to retrace as people expect less dovish comments from the ECB president. So the real move, it's kind of similar when we trade the Fed rate decision. The real move of the day doesn't really happen until after Powell speaks, until after the ECB president speaks. So 8:45, the ECB president speaking. By 9 a.m., we'll know what the main takeaways are. And so, probably at 9 a.m., she's going to sound a bit more wishy-washy. She's not going to commit to, she's certainly going to express concerns about the uncertainty, concerns about trade impacts, all that stuff like that. She's going to definitely sound a bit more cautious, but I don't think they're going to commit to any additional easing immediately because they are probably going to hold off to first off see how the EU's negotiations with the US go on trade, and then also see how the rest, because by Thursday I doubt, maybe I'm wrong, maybe Trump will re-announce the triple-digit tariffs on China on Tuesday or Wednesday, and there'll be a bit more certainty. But if that doesn't happen, they're going to have to wait. They're going to have to wait and see, how is this U.S.-China relation going to play out, and what does it mean for us? So I think that she's going to sound a bit more non-committal, which is why, the euro could end up rallying after the ECB rate decision. So as traders, we either trade quickly and take some quick profits on the short ahead of and immediately after the ECB rate decision, or, and probably it's the smartest thing to do, we wait for 9 a.m. New York time after the ECB president gets her first main takeaways out, that you can trade the real move off of ECB afterwards. So I think, that's really the way to lay out the ECB game plan, because even though the rate decision is pretty much a done deal, 25 basis point rate cut, and then also the projections will probably end up being a little bit more bearish, that afterwards we may not see too much euro weakness. So I am neutral euros, although I'm neutral bearish front of the week. I'll be looking for opportunities to sell euros in the front of the week. Euro is higher today. So we'll see. I'll look for opportunities to sell euros in the front of the week if possible, probably against the crosses. Many of you know I love to trade Euro Kiwi, Euro Aussie, things like that. So we'll look for opportunities there. And then as we get closer to ECB, we're going to stand aside. The other rate decision that we have this week is the Bank of Canada rate decision. So once again, is there more red or is there more green? I'm going to answer this for you. I mean, maybe Martin can quickly count and do our work for us. But to me, it looks like there's just as much red as there's just as much green. And, retail sales on the top has been weak, but labor market conditions, they had a really, really good April in terms of rate decision, in terms of job growth. And overall, I would say that job growth in Canada has been quite good. Inflation is lower. The one thing I want to point out is that, and I didn't mention this, is that in the Eurozone, inflation, if you look at this over here, and you look at this over here, we're still above their 2% target, especially in the core rate. So that's part of the reason why the ECB doesn't want to cut too aggressively, because they don't want to drive the core rate higher. But in Canada, core is high, but inflation has turned negative in April, and year-over-year headline rate took a huge drop between the last meeting and now. Housing market activity is weak. The other stuff like CAD, IV dropped below 50. Thank you so much, Martin. 8 to 6 red. So definitely more deterioration than improvement in Canada. But the Bank of Canada is actually not expected to. They're not expected. Where's the Bank of Canada? This is on Wednesday. They are not expected to cut interest rates. They're definitely not expected to raise interest rates either. So I don't know. Oh yeah, they're actually so they think that the Bank of Canada is going to cut interest rates, but which I'm actually a bit surprised by, because the market itself is not pricing in a Bank of Canada rate cut. Part of that is because the BOC has already cut interest rates quite aggressively. They were one of the first to cut interest rates in the cycle, and they've done so quite aggressively. So they're actually expected to take a break. If you Google Bank of Canada rate decision, pretty much all of media is going to tell you that the Bank of Canada is expected to hold rates steady, but they are expected to cut interest rates 2 more times this year. So this is a big week for Canada. In addition to the BOC rate decision, we also have the IV PMI report, the trade balance, and the jobs report on Friday. And I talked about how we were going to look at the other calendar that has more information on Canada on Friday. So let's just go to that real quick. We're just going to look at Friday. So Canada, you can see. Where's Canada? Make sure my filter includes Canada, which it does. Thursday, show more. Here we are, Friday. Let's just show Canada. None, Canada. Okay, So what I was looking for is employment growth is expected to drop 15,000. Full-time jobs are expected to drop because last month's report was so good. And so the market is looking for mostly bearish CAD data, which is why I'm bearish CAD. Last week, we actually had good CAD data. We had relatively good CAD data last week, which is why dollar CAD had dropped, to its weakest level. Dollar CAD had dropped to its weakest level since October of last year. But I think this week it's going to base. I think that we're going to see weaker data from Canada, and we're also going to see Bank of Canada leave interest rates unchanged, but remain kind of dovish and signal that a rate cut is probably coming next month. So, with the BOC rate decision, it'll be less interesting than the ECB rate decision. ECB is above all of the major moving averages, looks positive. I think we're going to pull back at the front of the week and then maybe end up positive at the end of the week. But in general, I do think the dollar will remain under pressure. Like you see dollar yen remaining under pressure. I think, we'll still see quite a bit of pressure in dollar yen. So that's primarily the gist of the week. That we don't have much in the way of UK data. So sterling is actually up today. Sterling is up today. We don't have much in the way of UK data this week, unlike the other countries. So I think, because I'm bearish dollars, neutral bearish euros in the front of the week, we're just going to end up a bit more positive sterling. We have the RBA minutes tonight. And remember, so this is really important because how the euro trades is shown through in the last 2 weeks by how the Aussie and the New Zealand dollar trade. If you remember, the RBA, they cut interest rates at their last meeting and they said more is to come. And so Aussie ended up selling off. Kiwi, New Zealand also cut interest rates, but they ended up saying that, we don't know, the next rate decision is not a done deal. And Kiwi ended up rallying. So if the ECB is kind of like the RBNZ, where they cut interest rates and they say the next rate decision is not a done deal, Kiwi could rally. But if they are like the RBA and they cut interest rates and say lots more need to come, then the euro is going to sell off. So that is, that is why the ECB rate decision is always best traded reactively. So with Australia, like I said, we have the RBA rate decision probably going to be bearish. We also have the trade balance, and we have the GDP numbers, and we have the PMIs. The GDP numbers are very important. We had stronger retail sales and trade, so those numbers could be a little bit better, so we'll have to see. With dollar CAD, as I said, we have a lot of data. Bank of Canada, IV PMI, jobs. Goriel is asking, should we just stay away from dollar CAD pairs? Well, I think it looks like it's basing. I think the front of the week, we may have some short CAD opportunities. I'm not going to stay away from the CAD. I love trading CAD, Aussie, and Kiwi. I'm just going to be obviously staying away ahead of Bank of Canada day. So we're not going to be trading it on Wednesday for sure. And maybe not even Tuesday night. Oh, we'll see if we'll trade it Tuesday night, but definitely not Wednesday. New Zealand, we have New Zealand trade data this week, but that's pretty much it. We don't have much in the way of New Zealand data. As I said, RBNZ cut interest rates, wishy-washy about the future. So Kiwi's just going to primarily trade in the market's appetite for US dollars, as well as just kind of risk appetite. But right now, Kiwi's doing very well. Kiwi has had a very, very nice move. Last week, triple zip buy signals were really, really nice. Rolling over a little bit today, but there's not, the market's kind of waiting for Powell's speech. And then Swiss franc and Japanese yen, I'm mostly positive these currencies, but data is definitely not on side. It's more of a risk story than anything else. So let's take a look at the calendar in general. We're going to look at everything that's kind of transpired and walk through it again. So last night we had weaker Australian data, inflation gauge, as well as job advertisements were weak. Aussie is one of the strongest currencies today, because the main story today is US dollar weakness. And we don't have too much in Australia until midweek. So it's, just trading on risk on US dollar weakness. And then this morning, we had stronger Swiss GDP numbers, weaker retail sales, weaker manufacturing PMI. Once again, Swiss franc, Japanese yen are trading all in the market's risk appetite. And then we have some revisions to Eurozone PMIs, a little lower. Market doesn't seem to care about any of this. Mortgage approvals a little lower. In general, pounds is stronger. Today, we have ISM manufacturing. This is going to be quite important. ISM manufacturing is expected to be stronger. And if, the dollar has been, US data has been surprisingly good. And so the dollar obviously has been beaten down quite a bit. So if we do get, A, slightly stronger ISM manufacturing, and then B, Powell speaks at 1 p.m. and says, we're not committing to a rate cut yet. It's not time. Then the dollar could squeeze up a little bit simply because of how far it's fallen in the past week. So that short squeeze should invite sellers. We'll keep an eye on it. But I think there could be some interesting action in the afternoon that for BK traders, we trade the Asia session. That could pave the way for some interesting trading opportunity in the Asia session. We also have the RBA minutes, which will probably be dovish and bearish for the Aussie. Tomorrow, we have the European flash PMI numbers, which are very, very important for Eurozone. And you can see markets looking for a very, very big drop. 2.7 to 2.4 and 2.2 to 2. We get that. That could accelerate the slide in the euro going into the ECB rate decision. And I think that number is going to be weaker because the inflation numbers in Germany were also weaker. So once again, I'm looking for euro weakness in the front of the week, and I think the data will confirm it. Tomorrow, we have JOLTS, which will probably be weaker. Job openings in the U.S. are fewer. Wednesday, we have some revisions to PMIs, which is not hugely market moving. We have ADP. I wouldn't give much credence to ADP because they've been kind of off lately. The market does pay attention to ADP, but last month they had a really weak number. The non-farm payrolls report last month was weak. It wasn't too terrible, but I think it's going to rebound just as a payback. And then we have the Bank of Canada rate decision. FOREX factory thinks they're going to cut interest rates. No one else thinks they're going to cut interest rates. I think this is wrong, but it will still be a big event. The beige book will probably be a little bit more cautious. On Thursday, we have the ECB rate decision. That's the main event. Remember, 25 basis point rate cut expected along with staff forecasts at 8:15. And then the ECB rate decision at 8:45. We have IVPMI coming out, jobless claims. Those are always important. And then on Friday, we have German industrial production numbers, French industrial production numbers, all a sideshow to U.S. and Canada jobs report. Both U.S. and Canada job report are expected to be weak, which could create some interesting opportunities in CAD yen. We are just kicking off the month of June. There's one really cool indicator on TradingView that everyone has called seasonality that I encourage you to click on to see. I like to do this at the beginning of every month to see if there's any seasonal trends. And you can see in June that, interestingly enough, most of the time in June, we either have a flat to positive month for dollar yen. So maybe June could be, after being beaten down so much, maybe June could be a month of a bit of recovery for dollar yen. What I found really, really interesting is that even though dollar yen tends to rally in the month of June, dollar Swiss is kind of counterintuitive. It tends to sell off quite a bit in the month of June. Although I'd be careful about this because a lot of them are like 0.5%, 0.5%, less than 1%, 0.5%, 0.5%. So it's really a flat thing. But it certainly tells us that maybe the franc tends to rally in June, which could create a very interesting opportunity for Swiss yen. Swiss yen, based upon their projections, their average, it believes that Swiss yen is going to rally 1.4%. I don't know if that's really the case, but it definitely suggests that we could have a more positive month for Swiss yen in the month of June. Now, how do you trade seasonality? Well, you don't just trade it blindly. It suggests that Swiss yen has a tendency to rally in June. What I would do is I would wait for my technicals. I would lean more heavily into the long trades than the short trades. So for example, Swiss yen right now, it looks like it's pulling back. If it pulls back to this level here, which is by the 50-day SMA around 173.40, then I would probably be a buyer of Swiss yen, because that would be a value point to buy Swiss yen. Of course, we have a lot of different things happening this year with the tariffs and trade that we didn't have in previous years. But from a seasonality perspective, I think, if we kind of ignore the other stuff or assume that it's not going to be so bad, then maybe a drop to 173-ish could be a good opportunity to buy Swiss yen, because June tends to be a very, very strong month for Swiss yen. I don't really see much additional seasonality. Dow futures, I don't really see much in Dow futures in the month of June. There's also nothing really in gold. Gold tends to have a little bit more of a negative tendency in the month of June, but then some months are really, really strong and a lot of these are flat. But I encourage you, it's really cool. Add seasonality onto your charts and poke around yourself. I think, while June does not have as much seasonality, July has a lot of seasonality. So it may be more valuable next month than this month. I mean, September's got a lot of seasonality. So I always like to look at this in the front of the month too. So hopefully you will find that valuable as well. All right, now I'd like to open up the floor to any questions before I shift it over to Boris, who will live trade with you. Any questions? So Martin asked, if there's very little data for currencies like pounds, should you trade or should you not trade it? When there's very little currency data, I love it. Now, I don't trade pound in general because it's too volatile for my book. But when there's no data, I love that, because it means that, you get a type of certainty of no data sabotaging that currency, and then you can focus on the other one. So I actually love it. Will ECB impact pound for a sell if there's rate cuts? Usually as a little bit of an impact, but not a significant impact, and not a really durable impact. When CAD is bearish and dollar is bearish, how could it be of a trend? Well, I mean, that's a very good question. Dollar CAD is not the only currency pair to trade. There's Euro CAD, CAD Swiss, CAD Yen, Kiwi CAD. So that helps us with the other currencies. Like Kiwi CAD could be a great trade this week. Any other questions? If not, if you found it the walkthrough valuable, give me a thumbs up. It definitely encourages me to keep going with these. Boris, you want to come on and say hello? I'm glad that you enjoyed it, Karen. We do this every single Monday, and I think it's probably should be the most valuable session for everyone. But if you enjoyed today, you learned something, give me a thumbs up. And let me know that, you're finding these sessions valuable. Thank you so much. Park, Thomason, Gorilla, Kaiken, Liam, thank you so much. Fran, I love you all for giving me this positive feedback. Serge, your question about drawdown profit, I'll hand it over to Boris. It's a good time for him to take over as we talk about trade, money management, trade tactics, and trading. So go ahead and make some money with Boris. It's time for the fun.
Hi guys, how are you? How are you? I just want to do one other thing. Let me just organize myself, see if I can do this. Bear with me, we're working on. I wanted to see if I could make this a little bit easier for you guys. It's gonna block everything. All right, well, we'll just turn it on, turn it off. I'm trying to figure out where the problem is that wealth charts is different from trading view. Okay, that was interesting. All right, so I'll just hide it right now for now, and then we'll just put it on when I don't need to execute. Hi everybody, how's everybody doing? Let me see. I want to change myself to maybe over here. So that makes me a lot smaller, which is what I want to do. So you guys don't really see me here. And where am I? I am, we're trading gold and NASDAQ. We're doing lots and lots of activity. I have a lot of stuff to share with you. I am basically long on a scalp. Here we go. I think I got done. We got done. Yeah, it was at 9:30. I got done on the trade. Okay, excellent. So we actually had pretty good, while Kay was talking, I had some pretty good trading here on these 225 accounts. One account takes only long side trades, and the other account takes only short side trades. And wow, look at Look at the opening range here. Really blew up. I'm going to talk to you a little bit about the very niche little techniques that I started putting into my scalp side, and give you a fair warning that, for example, these Wealth Charts accounts are on super aggressive mode, and so are, by the way, the gold accounts on TradeAbate that I have are also in super aggressive mode. I'm going to share with you. We're going to just trade gold the same way that we trade NASDAQ, and I'm going to share with you some of the key ideas of what I'm doing. But by no means is this like this is a interesting way for us to pass evaluation accounts, but by no means is this a good way to trade funded accounts. So I actually over the weekend I managed to get another account funded. Let me see what we have. Everything with a P is a funded account. 1, 2, 3, 4, 5, 6. Right, 6. Correct. I'm going to try and get 7, maybe 8. In a perfect world, we'll try to get 10, but 7 or 8 will be enough, and then we'll start trading the funded account in a much more conservative manner than we do this. But with eval accounts, especially because they're dirt cheap, and because even though the 90% sale went away, the I'll just simply show this to you guys. You guys can. I'm going to put the link in here right away so you guys can have it. So you can either QR scan this or take the link. Apex is still at 71% on discounts, so really dirt cheap. And actually, with the other thing that's really cool, which makes me also want to hit the eval accounts as much as possible, is they're going to charge only $100 instead of $130 to have the permanent license for the funded account, which is a huge discount. So if I can get a couple more funded accounts in the next 2 or 3 days, I'll have permanent, one-time fee, and you never have to pay anything for the funded account. So really good deals. Make sure you guys get the deal. Let me take this off of you, and then I'll show you. What I've been doing. So essentially, I am trading the switch mode. A switch mode is nothing more than just momentum going from green dots to red dots. And every time we have a switch mode, I put myself into either a buy condition or a sell condition, right? The difference is when I am dominant trend, and this is, as you can see, the trend is to the upside, right? Because the blue is above the green. Those of you, there's probably a whole bunch of you who are new, who have no clue what I'm talking about. So let me, tell me if you're new, and just give me a thumbs up, tell me I'm new, and then I will review everything with you in terms of what I do, how we trade, and what the structure is for our trading. Let me see you guys talk for a few seconds here. Tell me you're new in the room, and then I will explain everything to you. John is new. Okay, give me 3 people. Tell me you're new, and then I'll start talking, because I want everybody who's new. This is a very participatory room. We don't let you guys hide. So far I got 1. I'm not talking. Oh, there's Liam. Hey, Liam, nice to meet you. Very nice. Liam, where are you from? And Douglas, you're not new. Douglas, you're so not new. Douglas, you're like the oldest PK member ever. But okay, I'll grant you that you're new. Doug has been with us longer than the Berlin Wall has been down at this point. London new. Okay, Rory new. Very nice. Is everybody? These are like all British names. Are you guys all from UK? Oh no, it's from Sweden. Liam is from Sweden. Okay. Cantor Aliviola. Nice. Very nice. Okay. And tell me where you guys are from too. I'm just curious. Are you from Europe, Asia? Let me know. Let me know the countries. Love to know. Sometimes we have people from the craziest ass places. I think we had somebody from Afghanistan. I'm like, how the fuck did anybody get to us on YouTube from Afghanistan? I have no idea. US. Very nice. Okay. All right. So I do nothing. So what you see here is my very, very advanced BFF day trading system. And if you want the full 4 different strategies, techniques, and structures. All you got to do is just join us for free. Literally join BK Traders, and the actual day trading course is yours for free. You can totally get all the 411 on all the various strategies that are involved in this. That is not what I do with you guys live, because live we like action, we like trading, and also it's what I do myself personally. I created lots of great strategy actions for people who have a lot more patience than I do. But if you're like an ODD rattled scalper like me, they want to make 20, 30 trades a day and need action every 5-10 minutes, then this is, I'm going to show you what we do with respect to that particular structure and trade. The scalping part of my indicator is a very, very simple structure. All we do is look for 3 things: trend, momentum, and slope. Trend is personified by the short-term moving average above the long-term moving average. So blue above red. Blue is 8, red is 200. It really doesn't matter. Those are the values we've been using forever, and they're fine. You want to change them, you can modify. This indicator, of course, is also part of the BK membership. And if you want the actual indicator and actual signals and all the other stuff, you can certainly join us over here. And I'll put the link here for the best deal I can give you on the BK membership, which is over here. By the way, part of that deal is if you want that membership deal, I'll buy you a couple of prop accounts for free. So you get that deal, and you're actually going to get 2 or 3 prop accounts, depending on how much of a discount Apex gives me. Right now, I'll give you 2 free accounts with Apex, just as a goodwill gesture, as a good faith gesture on our part. You ever go into a Korean restaurant and Korean barbecue restaurant, and they give you like all these appetizers on the house. So the prop accounts are on the house from us. So if you're interested in that deal, just take that deal, and I'll be happy to enable it for you. What we do as far as trading is very, very simple: trend, momentum, slope. Trend is blue over red. Momentum is green dots or red dots. Slope is higher green dots, lower red dots. That's all it is. That's all it is. Yeah, you just joined today. That counts. Yes, thank you. It's very nice. Welcome. So you can literally see this super easily on every single structure. Oh shit! I got a gold trade. We gotta go get long gold. Hang on. Fuck. I gotta get long gold. Okay, hang on. What happened here? Sorry, I can't. And chat. Am I in the wrong count? Okay, we got done on gold. Okay, sorry guys. Hang on. I'm sorry. What the fuck is this? Oh, I opened up my my chat account. So I'll explain to you how I did the gold trade, why the gold trade. I went long on the gold trade, so on and so forth, just a second. But we just got done on the gold trade, so that was good. So back to equities. Trend is red over green, blue over red on a positive. Positive momentum would be green dots. Negative momentum would be red dots. Slope is the prior green dot. Is it lower? That's positive slope. Or the current, think of it this way. Green dot, this green dot is higher than this green dot. That's positive slope. This red dot is lower than the last red dot. That's negative slope. Give me a big yes, like capital letters yes. Did you understand the basic principles? This is literally the simplest of Euclidean geometry you can possibly imagine. This is the kind of stuff that my daughter in 7th grade does. Run over, what the fuck is it? Run over rise, right? Slope. Higher highs, lower lows. Give me a big ass yes. Thank you. I only see 2 yeses. I need 3 more yeses before I go on and explain to you the actual trades. Come on, guys. Do me right. Oh, there we go. Somewhere in the Rockies, nobody who is like actually a member of the group is allowed to participate. I need the newbies to participate because I want them to get engaged. Otherwise, they'll never learn anything. Okay, everybody who already knows the whole thing does not need to participate. John Nelson. Okay, everybody who's all the guys who are already funded and are actually making money do not need to participate. Okay, but thank you, I appreciate it. Okay, thank you, Janet. Thank you everybody who's new. Yes, in our trading room, I needle you to death. We bully you into participating here because that's the only way you really get to learn. Okay, thank you, Viola. Very nice. Okay, so once you understand those three basic principles, then you have to understand how you want to trade. Now, I'll tell you like the perfect, best, highest probability way to trade first, and then I'm going to ignore all of it because, of course, we want to do more trades. If you are a truly good human being, eat lots of fiber, watch your diet, exercise every day, practice yoga, and do every other bullshit in life to make you a valuable citizen of the world, then all you will do, very, very simply, is just simply trade trend. You'll only take green trades when it's in the uptrend. You'll take what we call the switch when it goes from a red dot to a green dot, right? And if you really, really want to be just the absolute, brown noser, straight A student, then you will not even take the first green dot. You're going to take the green dot, the higher slope green dot. So in this particular case, you'll take this particular trade. This is a red dot with trend positive, 2 higher slope green dots. You get long over here. Again, over here, 2 red dots. You have a green dot. You would take this green dot over here for positive. Again, over here, green dot, positive over here. Over here, you have 2 red dots. This is a green dot over here. You wouldn't take this trade. You would take this trade because you want to have a positive slope, and you do the good deed. And that's all you do. And if you did that, you probably will have a lot less stress and a lot less anxiety and a lot less cursing, and you will do very, very well, right? You will be generally on the right side of the trade and the right side of structure, especially, and by the way, this will especially be true if you happen to catch a nice long 2, 3, 4 hour trend period. Because all you're going to be doing in that structure is just buying the highest probability trades, selling them for very, very quick profit, and doing it over and over and over again, right? You're taking sort of the least riskiest trades. It's equivalent to like selling life insurance to 25-year-olds who never smoke, never drink, don't ride motorcycles, and practice yoga and live it, get 8 hours worth of sleep, right? Of course, we like to sell life insurance to fat, overweight, chain smoking, motorcycle driving degenerates. I'm kidding, but we like to take more risk because we want to take more trades in live trading. And one of the ways that we take more risk is we also trade trend and counter trend. That's why I have 2 accounts. And one of the great things about trading with Apex and trading prop generally is that you can separate and segregate your risk. And because it's not real money, because it costs $14 or $20 for $25,000 account, you can burn of that many of them as possible and still be on your road to getting funded and still get paid out if you trade intelligently. As my little motto that I came up with says, where the fuck is it? Over here. Capped losses, endless profits. That's the beauty of prop trading, right? As opposed to real trading where it's capped profits and endless losses. No, I'm just kidding, but you get the idea. The very nature of the prop game is that you never can lose anything more than whatever is your challenge account cost, which is a minuscule fraction of the possible payout you could receive if you do things correctly. So anyways, because of that, and because we just generally like to have more fun and action, we take both sides of the trade, both sides of the action. So if you think of us as like bookies, we take both sides of the action. So when we're trading counter trend, this is very, very important. When I trade trend ideas, like going back to gold, for example, look at gold. Gold is a trend trade, right? Blue above red. Gold is positive bid, basically. In other words, positive trend, right? In a positive trend condition, I am perfectly happy taking the first. I don't need positive slope. I just need trend momentum. I get trend momentum. I took this trade. I think I can actually show this to you on the charts. If I go to executions, is it on this one? Which one is it? Which one did I fucking take this on? Is it on this one? What was the trade that I took it on? Is it on this one? No? 95? Let me see which trade this was in. 94. This was 94. Yeah. Okay, so this was 94, right? So, wait. I don't know. Which trade did I take it in? I'm totally confused. Was it 93? 92? Okay, no, sorry. I can't even remember which account I took it in. All right, whatever. Doesn't matter. I took it in one of these accounts. I think it was this one. It was a 95, but for some reason, it's not. Oh, I know why. Hang on. All right. Huh. Or was it NQ? Did I took the NQ? All right, I don't know what happened to me. Sorry, guys. Somehow I lost the trade. Anyways, I took this trade, and it was the first red dot. I don't need positive slope, because when I'm in trend, I'm perfectly comfortable taking the trend condition and making that a viable trade for me. Okay, making that trade the trade that I want to have happen. Hang on a second. I just want to check something. Make sure that I got this right. Which account is this? I'm on 94. Huh. Okay. Never mind. I can't find it. I'm sorry. I'm a little bit distracted because I'm trying to trade both NASDAQ and gold, and it's a little difficult for me when I do this live for you guys, because I'm usually always trading just one thing. By the way, a very, very good rule of thumb, if you're trading this for real, not for show like I do with you guys in live, is to trade only one instrument, which is what I do. In real life, I only trade NASDAQ, because then you can see, the focus is there, the P&L just really grows nicely, and you can monitor the trades with great precision. So speaking of that, right now, as we're looking right now, we had a nice big run on the positive side. Now we have a switch. A switch is when you move from green to red or red to green, change of momentum. Because this is positive bid, I need to have two red dots in a negative slope in order for me to even entertain a sell trade. In this particular account, my sell trades are allocated to the 90 account, and my buy trades are allocated to the 80 account. So I'm going to go to my 90 account just to see if a sell setup sets up. But that's basically it. I am always looking for both sides of the trade. I'm always trading, two separate accounts, one account on the buy side, one account on the sell side. Remember, sometimes the buy account is going to be positive trend. Sometimes the buy account will be counter trend, in which case it's going to require slope confirmation. And with trend, it's not, at least in the way that I traded very aggressively. How many points do I target per trade? I target a very, very negative risk reward ratio, and that's a separate conversation that we can talk about a lot in my coaching session and everywhere else. I trade 5 points target, 20 points stop, and there is a whole bunch of variations of how do we get out of trouble when how do we reconcile our stop losses? What do we want to do for our purposes, just for trading live? I am not going to, especially because I'm trading super, super aggressive. I'm trading one large contract. I'm trading $100 trades, right? Basically, in this condition, $100 trades, $25,000 account, I need 15 winning trades. I'm funded. 15 winning trades. I'm funded. That is literally sometimes 2 or 3 hours worth of work if you kind of hit all the trades. But of course, life just doesn't work that easily. You're going to get stopped out. You're going to eat big losses. So when that happens, there's a whole bunch of different ways, that we talk about it in scalping, in coaching, of how we can reconcile those things. But for our purposes, we're just going to eat them and keep going. We're going to be looking for a 5-to-1, 6-to-1, ideally 7-to-1 ratio, meaning that I want to win 7 trades against 1 losses. If I can maintain that continuously, and you're not going to maintain it continuously. In other words, it's going to be very lumpy. Sometimes you're going to get 7-2. Sometimes you're going to get 9-0. It's all about the runs. That's why it's very important to segregate the accounts. And if you're, so long as you're sort of like, 1 to 400, you are fully protected from getting stopped out on just one single trade. Like, no one single trade, or not even 2 single trades, not even 3 single trades will take you out of the account. But it is very, very aggressive, and you have to stick to the process and believe in the process of how it trades. Right now, I got 39 seconds left on the short account, and we're trading the 90-90, which is the short side of the trade. As you can see, 20 these accounts are at 25,000. This one is at 25.4. This one is 25.3. The idea is to trade them for the rest of the day tomorrow and see if one of them we can nurture to victory. So I got 18 seconds left here. After a big pump to the upside, NASDAQ seems to be coming down. Let's see what we want to do here on NASDAQ. 5, 4, 3, 2, 1. We always wait to the close of the candle. I'm short here, and let's see if I get done. And I got done. So that was a very, very fast trade. And that one of the reasons why that's a very, very fast trade is because when you have huge momentum like you had now, a big unwind momentum, it just clicks right away. So this one got hit. We're at 25.4. Now we just simply wait on our hands. We have nothing else to do. Those of you who love to be positional traders, of course, can milk this trade all the way down for another 30, 40 points if you want to. That's not what I do, simply because I like to do short-term trades. But it's a 520. Yeah, exactly. But as you can see, Kayo, when you get it right, you just, you're hitting trades really, really hard. And the point is, we're trading. This is very much prop trading, where your goal is not to be a perfect trader. Your goal is to hit your targets. The target here is 26,500, $1,500 to target to get funded. The strategy for when we trade live accounts, which I'll be trading with you guys probably like next week, I think, because I'm going to get to about 6 or 7 live accounts. Well, we're at 6 already, so I want to get to maybe about 7 or 8. 7 or 8 will be enough. It'll be a completely different strategy. It'll be the same entry strategy, but it'll be a completely different money management strategy, money sizing strategy. But for funded accounts, I want to get funded. My view with funded is I want to get funded, or I want to get blown out reasonably, not like, in one trade. I want to give myself a week to get funded, which is a very, very, very aggressive approach versus when I'm in a funded, mode. I could spend a month trying to get paid out. It's a completely different structure. No, it's not a 50 and 20. It's an 8-200. If you want what is this? Whatever your party time, I have no fucking idea how to pronounce your name. I'm going to call you DA1. If you want the answers, join our group. Anybody wants answers to anything that I'm showing you, join our group. It's totally free, and go watch my day trading course. It'll give you every answer you want to know under the sun. Plus Kathy's Forex trading course. It will give you every answer you want to know under the sun about how she trades Forex. Okay. Oh yeah, that's good. GFAS. Hey, GFAS. I've been trading ES, like a couple of other accounts, which has been a lot of fun. I actually got funded off the ES on that 6 account. So yeah, I mean, there's literally a million ways to make a profit, depending on how a million ways to make a profit, depending on how you want to do it, which instrument you want to use, how aggressive you want to get with all of this stuff. Shit, I missed my gold trade. I'm yapping. There was another gold trade here. So this is interesting. do we take this trade here? Is this positive slope? It really is. But which one is it? I want to go to the 94 ones. Yeah, let me go to the 94 ones. Hang on. 33 seconds left. That's my 94s. 94 account. Huge move. This is a big ass move. I should have been in this trade. This is really going to be a tough trade for me to take the gold, but I'll take it again. It's, why not? We're fucking around. We might as well have a good time. 10 seconds left, 9 seconds left, 7 seconds left. I'm watching until it gets down to 0, 3, 2, 1, buy. All right, we're long gold. Very, very large thing. Gold is notorious for slipping against me. So, everybody knows I hate trading gold. And I hate trading this trade because I should have been in this trade. I just simply, was yapping away, wasn't watching the screens. Now it's just it's a matter of whether I get enough momentum to the upside. Gold is also super, it's obviously a run to the 400. The question is, do they want to run the stops again to the 400, or they ran the stops at 400? They're going to drop it like a stone, which they always do with gold. So, we'll see. This trade is fraught with risk, but it doesn't matter because, again, I'm only taking a $400 risk on this trade, and if it goes wrong, I'm just going to keep. I'm not going to increase my sizes so I can survive this risk. 3 or 4. I can do 3 or 4 trades in a row, and I'm not going to be wrong 3 or 4 trades in a row on a trend-based structure like gold. Next time I have a trade, I'll hit it. This was an unnecessary risk, but I do it for you guys. And again, I'm a lot more aggressive. You're going to see a completely different side of me when we trade the funded accounts. I'll be the biggest pussy you've ever seen in your life versus, just completely unhinged degenerate with the evals, because the purposes are different. The purpose in one is to pass the eval. The purpose in the other is to maintain your account, to stay alive. The purpose in one is to hit the target, and the purpose in the other one is to stay alive until you hit the target. So that's why you can afford to take bigger risks on one and try to be a little bit more intelligent on the other. Fucking gold is gonna slip against me as usual. I fucking hate this instrument so. I mean, I don't even hate it. I totally understand it. I really, really understand it. Like, I was an idiot to make this trade. If this trade works, I'll be pure luck. This is zero skill. The skill was in this trade. This is pure luck. This is just you hoping against all hope that momentum takes you to the target at this point. But it's fun to play. Let's take a look at what Nasdaq. Nasdaq is doing nothing. We're still in the red zone. Nasdaq, we've been actually trading relatively intelligently here all morning long. So that's kind of helpful. At least I've been pretty good on this one. Oh, this is really great. If you're coming into the US, by the way, you don't have to live in the US to trade futures. If you live in any OECD nation, basically, where, if you live in any European nation, if you live in Singapore, Japan, where else in Asia? What else in Asia did they do business? Hong Kong, I think. I'm like anywhere where you have like deep regulatory authorities. You can trade futures. Fuck me, gold stopped me out as usual. All right, so I ate this loss on gold, and now I'll have to be very patient. We have to try to work this back. I will show you tomorrow. We'll see. We'll see what happens to that account. But I told you that was a stupid trade. But we took it for all it's worth. It's a good time for me to show you that when you make stupid trades, you can always reset your accounts. Go out there, get them really, really cheap. Go get them right now. Okay. That was no surprise. That was a well-deserved stop because it really was an idiotic trade. I'm just looking to see if I could make more trades with you guys. It's because I'm trading so many screens and I'm talking to you guys. The thing about my setup that's very, very important is if you miss it, you shouldn't take it. And I very often, every time you see me in the room, I would say like 70% of my stops is because I missed the setup, but I want the setup, and I take it late, and I'm always eating it. As I told you, the trade in gold was here. This was the trade. This was the trade. Right here. This was the trade. This would have been so super easy, but this was not the trade, so I ate the trade. It's fine. I'll come back to that. At least we're doing a good job on NASDAQ, and the P&L here is looking really, really good. Okay, we got nothing else going on here. It's going to take a little while. If this goes negative trend, in other words, if NASDAQ completely unwinds the 930 bump, it will go back. Gold, in the meantime, going back up. We're going to go back up in gold. I'm going to go back long into gold here. How much time do I have? 32 seconds. Okay. Big ass trade, man. Look at this. See, this is typical fucking gold. Retrace and come back up. Retrace and come back up. All right, let's see if we can take this trade up. 12 seconds left. 9, 7, 6, 5, 4, 3, 2, 1. We're long gold again. It dropped again. It popped up and dropped again. How did I get filled so badly? Wasn't this the close of the candle? Wow, what a slippage on the gold. This is another reason why I really hate trading this instrument. Look at me. I was entered on the close of the candle. I got filled a full $1 higher on this fucking trade. Wow, was it a shitty fill? Wow, that was a really, really bad fill. Okay. Wait, hold on a second. Not only was this a bad fill, but this was not a signal. Jesus Christ. Sorry, guys. This wasn't even a signal. I'm sorry. I just realized this. At the very last second, literally at the last second, I should have waited. The gold, the red, the green dot disappeared, right? So this was not even a momentum move. This thing just simply died on us on the very last second. This is another reason why I fucking hate gold with a vengeance. Because it will do this sort of very, very quick move and then a fake out move. So this wasn't even a signal. So it doesn't even deserve to be a trade. I'm going to be eating this account. Is just going to be burnt on bad trading. It's fine. Fortunately, I have like 3-4 more accounts that I'm going to try and run with. God damn it. All right. So we have like $500 left in this account. This account is really going to be a salvageable story. We'll see if I can salvage this account the other way. What's NASDAQ doing? NASDAQ is doing nothing. How many trades did I take after the switch? Just one. I mean, this I thought this was a switch. It wasn't a switch. I got faked out at the very last second. If this was it, and this is another reason, by the way, why the most important signal in all of this is the dot. If you don't have a dot, you don't have a signal. And in this case, the dot literally disappeared at the very last second. It just completely fucked me over. And I, wasn't paying it as close attention as I should have been. And I got stopped out. There's nothing on the NASDAQ side because we already did all those trades. I actually figured out a way. I figured out a good way for me to keep eye on both of these accounts now. So hopefully I'll be a little bit more alert to all of this. Yeah, Rick says he's only trading gold in Asia now. It's a really good, really good idea. You know, I'm trading gold with you. We trade gold so much better in Asia than we do in North America. But you know, everybody wants a little bit of activity. Yeah, ISM was at 10 o'clock. You're right. I also ran into news. How is ISM, by the way? Let's see. What did ISM do? So we have Logan. ISM was a little bit. No, prices were a little bit worse, which is good. New orders were essentially the same. Employment was a little bit better. But still underneath 48. There really isn't wasn't really a big signal. All right, let's see what gold wants to do here. Okay, so there's two ways there's two possible trades here. It's either a trend trade where we get a green dot, or if we get a red dot, it'll be a lower red dot, lower slope, a decent counter trend short if it develops. Right now, it doesn't seem to be going either way. You know, buying gold into the 400s was in a way a sucker bet, because if gold doesn't hold it once, it's very likely going to reject it. Let's see if I'm right, and let's see if this gives me a red dot, if the short here is going to work to the other side, because once they rejected the 400, maybe they're going to take the gold back down a little bit for profit taking. But we need the red dot. We're going to stay very, very tight on this candle, and until we get the red dot, we're not going to trade it. Matter of fact, you know what's a really, really good best practice, which is something I should start doing with you guys, is actually let the candle pass by. That's one I especially with gold, where it really fakes you. I'd rather be late than early in all of these trades, because if the trade is correct, it's going to work. But if it's not, you won't be trapped in a false signal. So here the candle just gone away. So now we're going to sell. It's a brand new candle, right? So now we have legitimate sell condition in gold. Let's see if that works. And we have a buy. Okay, I'm not chasing it. See, in this case, I'm actually going to play NASDAQ properly. So like right now, I missed the NASDAQ trade because we're focusing on gold. NASDAQ gave us a green target. The trade should have been here. Profit would have been here. We're done. We're not going to chase it. I'm not going to make the mistake of chasing this because I want to show you the trade, because it's not worth it. We're doing well on NASDAQs, and we're just going to let this one go. This switch is done. We're not trading the switch. So we were in gold. The gold, by the way, just teased me to target profit, and then just came back away. So we will just simply stick with this trade and see if we can hit the target. But honestly, like, the most important things about the setup isn't the setup. The setup itself is fine. The problems with the setups occur with the flaws in your execution. Chasing trades, taking long trades, getting faked out on dots, all the stuff that you see me do here are really valuable lessons for you guys of what not to do. Avoiding those mistakes avoids huge amounts of unnecessary losses, which is what creates the consistent profits. Yeah, Evgeny says that NASDAQ is doing classic pattern, taking open up and go up. Yeah. Yes, exactly. So we're still watching gold. What's my target in gold? 94.0. 94.0. and we're done. And this is a good example of, I told you this was going to be a high probability trade. I knew, it had much better chances. We rejected the 400, gave you a dot. Like, the setup works awesome if you actually follow it. And of course, it will fuck you royally if you don't. It will occasionally you can occasionally do everything by the book and still lose money. But that's the point. That should happen 1 out of 6 times, maybe even 1 out of 7 times. When it's happening one out of 2 times, 1 out of 3 times, it's not the setup's fault. It's your fault. You're making the mistake, right? You're making the critical mistake of rushing it, or chasing the candles late, or not letting the candles complete into a full dot mode until it generates a number. So today was a good lesson where I did everything right in NASDAQ, which is great on the wealth charts. Those accounts are done. And I got butchered a little bit on gold, but only in one account. That's the other thing, is I'm only butchered in one account. The 95 account is still good. And then the 91 account, I think, no, it's 92 account. 92 account is still good. So I got 2 accounts that are above 25 that I can trade reasonably, for the rest of the day. And then if I wanted to, it's going to be, just a personal challenge. Can I bring this account back from the dead? Can I bring this account back up to 25? I'll let you guys know. Here we are on this account, giving us a buy signal, 2 seconds left. I'm going to wait till the candle closes. And now I'm long on this one. Again, single green dot, but in a positive trend. Is that a reasonable trade? Yes, it is. Will it work? Maybe it doesn't work because this is gold. But that is at least a legitimate trade, right? We give it as much possibility as we possibly can here. What's going on over here? Okay. Meantime, switching over to NASDAQ, no signals yet, but we're positive bid, positive trend. And if we get a green dot, our buy account is the 80 count. So I'll just position myself for the 80 count. And we got done on this? No, we did not get done. Unfortunately, I got margined out on the gold account. Okay, so we'll just watch it there. That's fine. No signal on the NASDAQ as I stand here, so that's fine. We'll leave it alone. As to the gold, we just simply, we killed that account with bad trades, but we still have 95. We have the 2 accounts that I set up yesterday at 91s, and we're going to run those. Sorry, it's 92s. We're going to run both of those, and we'll see. We'll see if I can get one of those to get funded. And again, this is what I kind of want to sort of explain to you. If you are absolutely concerned about taking one account and getting it funded, it's going to be a very, very long, frustrating road for you. In the evaluation phase, you're not in the perfection phase. I mean, clearly you don't want to be doing what I did this morning, which is imperfection. You want to do as much perfection as possible. But in the evaluation phase, you are in the let me just hit those trades and take me to profit, right? Once you get the accounts funded, you're going to trade it very, very differently. We'll talk about that next week. But that, I have 7 accounts funded, probably out of 20 possibilities. And that's how, you clearly don't want to have like 100 possibilities for 7 accounts. That's idiotic. That means you're not really trading at all. Or you either don't have a strategy or you just really don't have a good execution. But if you have a great strategy like I do, and generally good execution when I'm not trading with you guys, you have very, very reasonable chances to kind of like every 3rd account get funded. And that's perfect because they're dirt cheap. What do you care if it costs you, $30-$40 to get funded? You then now have $25,000 of capital that you can work with, and then you can go for the for the payouts of $1,500, $2,000 on those accounts. That's how you really work the whole the whole situation. That's why, I keep telling you, get a bunch of these accounts. The key thing is the discounts, because they're so dirt cheap. Just get a whole bunch of them, and then obviously trade them intelligently, but give yourself multiple opportunities to succeed. Back to gold now. Is this a trade? Yes, it is. Because even though this trade took me out, not because I was it was just I had no margin. I just simply literally I think I margined out because I was I let this account go. But this is positive slope, positive account. We can we have this account ready. We can give it a shot. Which account is this? 92. 92. Okay, 1 buy. Okay, let's see if this works. Target is 406. Now it's making a third run towards the 400. The target is underneath the highs of this run. We'll see. It's just fucking gold. Watching NASDAQ out of the corner of my eye to see if I have any signals there. So far, none. Okay, gold gets done. Yes, my friends. People are asking me, do you want to get? If you want the discounts, scan this, because that will take you to the link. Like if the Justina, oh my goodness, are you Polish? Polska Szkoła Transformacji. Okay. How did you survive the election yesterday, Justina? Are you happy or sad? Anyways, yes, look at this link, or I'm also going to put the link over here. I actually put the link in pinned to get our discount. Use our discount. That way you get the highest discount possible. Okay. I just put that link in there. Anyways, final trade of the day is done. So Justina, I just put the link into the she said very good. Okay. All right. Now I know which side of the trade you're on now. Okay. Yes. I love my Poles. Some of you may not notice, but Poland is the bomb of Europe. It has managed, because of capitalism, free markets, and a proper society, to actually have GDP equivalent to Japan in 1 generation. That's how well the Poles are doing. So welcome. We love the Poles. Thank you for coming to our trades. Yes, go out there, use the discount, get a couple of Apex accounts. I recommend. So guys, you can get any account you like, but you see me trading 25s, which are the smallest, the cheapest, the smallest, and the easiest to pass an eval on. Even though that's not in our interest is to sell you the $250,000 accounts, the big accounts. It's not in your interest. So I much rather you guys buy the accounts that give you the best edge. The $250,000 account sounds great, but the ratios, you have to work 3 times as hard to get funded on a 250 as you do on a 25. It's a 1-to-1 ratio versus a 1-to-3 ratio. So, if you're greedy, go for it, but it's a much harder journey. So it's much easier to get funded on 25. That's why I recommend those. We used to recommend 50s, which are very good too. And everybody always likes to do 50s, which is also, a very legitimate choice, but 25 is literally the best. So I give you my recommendations, get the cheapest one. I don't know. I lost track too, Galavan, because there's like a lot of different accounts. I know that on the trades in In NASDAQ, which is where I was really focusing, we did well, right? This is all today, right? You can see like the cool thing about wealth charts is that, by the way, so yes, I have not spoken to Rob yet, but I'm going to try to speak to him today. Everybody who's a wealth charts customer, and the thing is that you know that my indicator is fully compliant to TradingView and fully compliant to wealth charts, meaning that you can use it on both platforms. And of course, wealth charts is a platform we very much like because it's a lot easier, a lot better to trade on it. You know, the integration is right on the platform. You can see how easy it is for me to keep track of everything. I'm just waiting to see how long it's going to be before they get the final update. And once we get the final update for those of you wealth charts customers, I will let you guys know. And then you'll be able to have the exact same clean look that you have on TradingView. But whatever you guys like, if you like Tradeovate's TradingView selection, go for that. If you like wealth charts, go for that. It's as a BK customer, the experience is exactly the same for you guys. You'll have access to the indicator. It's really hard, Rick, because it's either a super easy trade or just a guaranteed stop, right? A massive momentum candle is either a situation where you're just, boom, you're done in 5 seconds. It's the easiest trade in the world, or you're going to eat the trade on a retrace. And, I don't have I basically just take them. My view is I take them and I hope they work out. And if they don't work out, I fully understand why they don't work out. I don't get mad at that. I understand there's a retrace risk in there. So, and again, the way you combat that is when you're in the eval mode is you just have a ton of accounts and you just move on to the next account. The way you deal with that in a funded account is a completely different story. Oh, cool. All right. Very nice. Thank you, DA1. I did not pay him to say that. We do have candles setting up. I got to run though because I have a meeting, guys. So we're gonna have to go. Oh! Before I forget. Oh, fuck! I totally forgot. Tomorrow, we don't do 9:15. I have a podcast interview I got to do tomorrow, which blew up my calendar. So we're good. I'm gonna reschedule tomorrow's opening for 10 o'clock. I'm going to try and get the podcast done by 10 and just hop right on. And we'll maybe do 45 minutes of 10 o'clock trading at 10 o'clock. So just letting you guys know, we're not going to start 9:45. It's going to be 10 o'clock tomorrow for trading. And then we'll do the best we can just because of scheduling conflicts. Okay. So we'll make that adjustment on YouTube. It's just the Trading Battle podcast that I host, so I have an interview that I got to do. We have a candle setting up here. So, for those of you guys who are game, 35 seconds left, should be an interesting trade for us on the NASDAQ. All right, guys, I got to run. Everybody have a wonderful, wonderful day. Thank you for hanging out with me. Make sure you get a couple of Apex accounts. Any questions, just, ask me in the room or email us. And otherwise, I'll see everybody tomorrow, 10 o'clock, not 9, for trading. Okay. Thanks a lot, guys. Bye-bye.